Briggs is our cattle market analyst this week. Final numbers from 2015 confirm Nebraska is the largest producer of red meat in the country. This state, along with Iowa, Kansas, and Texas, accounted for nearly half of all red meat production in the U.S. last year. Nebraska alone was responsible for 24% of the nation's commercial cattle slaughter. In the USDA's Cattle on Feed report, the U.S. total was 1% above a year ago. Placements during March were 5% higher than in 2015, and marketings were up 7%. It's continued to be a rough go, though, in the feedlot. The latest sterling beef profit tracker for the week ending April 23rd put losses at nearly $123 per head, with packers making almost $111 on each animal. We talked with Mike Wednesday morning and began by asking about the recent slide in cattle markets as we close out April.
They're struggling again. We busted them really hard last week. We're down here in the low 120s, middle 120s for fat cattle. They've just absolutely hammered the board again because you've got way too much fund and money manager participation, and the market can't handle it, and it really puts a bearish spin on everything.
Was that the reason for the deterioration last week?
I think it was. I think you saw money managers and funds, once they want to push the market one way or the other, it's not a big enough market to withstand that, and it just goes the way they want it.
Any thoughts from the Cattle on Feed report?
You know, it was mildly bullish just because placements weren't so big and marketings were good. I think that was primarily because you had a pretty good feeder fat swap. In other words, you could sell your fats and actually buy some feeders that had a little margin, which is something we haven't been able to do for quite a while. So you saw a lot of people go ahead and move their cattle.
Record large placements for the month of March in Nebraska dating back to 1994. Is that surprising?
Yes and no, but you can understand it because there was a lot of guys last fall didn't like the calf price because it had dropped precipitously from the previous year. So they decided they were going to grow their calves. Well, that's when those calves were ready. There was an awful lot of cattle for sale last month. I don't know what that number is versus previous year since I didn't look, but I know that's going to tail off very quickly here. So it was one of those deals you had an available supply, and that's when those guys brought those calves to market because they do it right before it's time to go farm.
Where are margins at in the feedlot now?
Oh, they're still very negative, very negative. I don't see that changing. Now, you've been able to buy some cattle with some margin, and if you went ahead and protected yourself, you'll probably be okay, but I think this thing's in a little bit of trouble. You know, the last time we were here, we talked about the start of our spring rally, and it was very small and very short and very shallow, and then we've dropped off. Now, there's a possibility here that we've put a solid low in this market that we might get to live with for 60, 70 days. Well, we got to get up off of this. We've got to see some demand out of the packer. And what's most disappointing for me, if you go to the retail counter, the retail prices are very similar to what they were when cattle were $1.70. We've taken $50 out of that, and the retailer hasn't helped very much.
Would that lead me to say that your confidence going into grilling season is not high?
Not unless the retailer wants to start featuring beef, and typically that's when beef moves. But I mean, they really need to have some special features, but they've got tremendous margins, so they could do some featuring. I talked to a beef buyer the other day. We still have a problem because pork and chicken are so cheap, and you don't have any real wage growth in this country, so that's always a problem. The consumer's forced to go to the cheapest option a lot of times.
Going back to the margins in the feedlot, with sustained losses month after month after month to the industry, the feeding industry and feedlots across not only this state but to the south, at what point is that a significant threat? Oh,
it's already there. I'm sure in a lot of cases the bankers are already dictating on what's going on in certain feed yards, and you're gonna start seeing some issues there. We've got to buy feeder cattle cheaper. Now, unfortunately, that's really going to start beating up that rancher. Now, he's had 3 or 4 or 5 pretty good years if you sort out the drought years. The packer's just making tremendous margin right now, and I don't know how we're going to get any of that back. Unfortunately, the least path of resistance is we're going to have to buy feeder cattle cheaper.
Yeah, why is the packer doing so well on margins?
He's done an absolutely tremendous job of managing his inventory, and they changed their mindset. They used to be about market share. I can't lose market share. I got to buy the cattle so I don't lose market share. They flipped to margin management, or they want to make sure they maintain their margins, so they're not going out there and just blowing their brains out buying fat cattle. They buy just what they need for the amount of supply they think they have to sell, and they just keep that margin, which is quite frankly, a smarter way to run a business. And they've done a tremendous job of that, and they've never let this market get out of hand on them.
How has this recent rally in corn affected things?
Well, you know, it's made your cost of gain go up a little bit. I still think it's pretty short-lived. I think this is the planning rally. This is to ensure that we get the acres that the market thinks we're going to get. Once the corn gets in and if everything looks good, I think this thing just drops like a lead balloon.
All right, reiterate to me where you think cattle markets are going to go here as we get into May.
I don't ever see us getting out of the 130s if we can even get back to the 130s in fat cattle. Hopefully we can just get up in there and kind of stabilize this thing and keep it moving, because I think that provides fair value for the consumer and fair value for everybody all the way through. You know, whether or not we can do that, I don't know.